Navigating the crypto market every day is really, really hard. Believe me, I've been there, done that, and I've seen many, many people fail because it's not easy. You know, every day something is changing. Every few hours something is changing. The candles are unpredictable. The volatility is insane, right? Because we're in crypto. This is not a stable market. So it's very hard, very difficult for a lot of people to pick right coins, or pick the right time to pick up any coins, right? Because there's no such thing as right coins. You're literally putting your faith into a digital currency or digital code, right? A line of code, literally, on some occasions, or a few lines. So it is hard. It is very difficult to pick good coins. Now, I mean, the way I look at it and the way I kind of navigate myself is something I can talk about. Don't know about other people, so I won't talk about that. And also, just to mention, this video is not a financial advice. You do whatever you want. It's entirely up to you, because ultimately you win or you lose, right? I don't gain anything from you. That's the most important thing. So now that we've got that aside, let's talk about this. So the crypto markets are volatile. I mean, we can have volatility within every few hours, to every 4 hours, maybe even daily, whatever you want to say, right? Volatility is there. And that also carries a lot of information with it. And information is also money, right? So let's talk about this. There are corporations and institutions out there who monetize on this because they've got something to write about, right? So you'll have a lot of news being published and a lot of viewers, subscribers being gained from this, right? And when I'm talking about news being published, I'm not just talking about news corporations or anything like this, or news outlets. I'm talking about YouTube, Telegram, Twitter, or not Twitter, X, Discord, you name it, whatever community you're part of, right? Twitch, Facebook, you name it. There's a lot of volatility, and that provides fuel for these corporations or these institutions or individuals to operate on. I'm one of those, I try to kind of desensitize myself from whatever's going to come from there. So, if there's something negative, I'm like, doesn't bother me. Something positive, doesn't bother me. I just look for the information. It's like, okay, it's there, fine. Does it give me enough help? Like, for example, when I receive notifications from X, previously known as Twitter, I just read the notification, the first line of it, and the ones that breaking and then nothing, I just skip them. Like, right, forget it. Forget it. I see what this is. The guy wants to get my attention, which I understand. So or guy or girl, whatever, right? The point is they'll put breaking and then nothing. I'm like, no, you're not really, you're just publishing something else. I'm going to leave that aside. I want to see the first line. Interests me to open that tweet, and I want to read the rest of it. If you're just going to say breaking and then nothing, I don't want to know about it. So that's how I kind of ignore a lot, right? Because majority of the information that's coming out is only to benefit the person who's publishing it. They're not doing it for the public. Yes, maybe it's actually breaking news, probably is, but that's not their intention. Their intention is to get you to go and click that, or to create a little bit more hype on their own profiles. So I ignore those, right? So those things I 100% ignore. YouTube's I do ignore. Now I do get feeds I get videos on my feed a lot of the time, and some things are quite interesting. Like yesterday, there was one video, I was literally putting YouTube on, so on my way drive I could listen to something, and I think it was on my feed because I have viewed a video from the particular channel before, and they were talking about the exact same thing as I spoke about yesterday, about the upcoming Bitcoin death loss. Wow, someone actually caught up, right? Okay, they were a bit late, but they caught up. Anyway, great. So when we're looking at the market, you've got to look at it in, two ways, right? If you're a daily trader, so a day trader, you trade within your day time, you want to be looking at micro, right? You're looking at micro levels. I'm more of a macro. So for me, it's all about the bigger picture, not the small things. Small things don't matter, because small things, they will make me money, but they will also give me a lot more stress. And believe me, I've lost enough here. I don't want to lose anymore, right? So I always look at the macro, and the macro is like kind of forecasting. Okay, what's my expectations? What can I expect in the next week or two? For example, currently looking at the Bitcoin daily chart, right? So when I'm looking at the Bitcoin daily chart, I see something forming, and it's indicating that within the next week or two, Bitcoin could actually go and test 21K, right? Could actually go and test 21K, which is pretty fascinating, you know. So now I know this. I know I need to stand back. On the last video that I'd done with the chart, you may have noticed, I talked about how I'm going to stay out of the market. And this is part of that, right? Where, you know, I'm not looking at the market to buy anything right now. I'm going to set up my notifications, you know, for around anything below the 25K basically. So I'm going to say 25K trigger, let me know as soon as the market starts pushing down. Then I'm going to wait to see how far it goes. Of course, I have my support zone around the 21,300. So I'm going to look at that support zone and I'm going to say, right, is this the time for me to enter? You know, as soon as I have a confirmation, I will either enter or I will not, one or the other, right? But I need a confirmation. Confirmation is I need another candle confirming to me, yes, it wants to go down, or no, it doesn't want to go down, one or the other, right? So it's all about staying calm, you know, and making that decision based on facts, right? Just not on news and hype and all of that, right? You know, when we see the market pumping all of a sudden, like, you know, and I'm sure you're going to see the market pump within the next few days, and you're probably thinking, what the hell is this guy talking about? He just said it's going to go to 21K. Why is he saying it's going to pump? You are going to see a pump, right? Next few days, you're going to see a pump, and then you're going to see the big dump, right? Now, that's all part of the game. Once you start understanding it, you can stay calm, you can step back, you can just observe the market and say, right, okay, you're doing exactly what you need to do. And I could be wrong. I could be absolutely wrong. The chart may be tricking me, right? You know, it could be, everything that I've said here could be absolutely wrong. But I'm not saying everything is guaranteed. What I'm doing it based on probabilities. Probability of the market pumping within the next few days is very high. And then the probability of the market dumping to a lower level in the next few weeks is also very high. So there are two different time frames we're playing with. Ultimately, on the macro level, when I'm looking at monthly candles, when I'm looking at 6-month candles, I see a whole different story. I see that we're still trending up. We haven't actually broken a long term, and I'm talking years and years, like over a decade long, trend line. We haven't broken that trend line, so we're actually still safe. Now, on another video very recently, I think it was like a month ago, I mentioned how we didn't go above the 50% of the market bottom. So since the bottom, we haven't gone up. Since the market high, like all-time high, which we had at the, just say 70K, right? So 70K all-time high. We need to get above the 35K in order to confirm that we're in a full, full run, whatever you call it, right? In my opinion, we have started the bull run already since we hit the 15,800, 15,400. I can't remember. That was our bottom, technical bottom, right? So we've had a technical bottom. We've gone up to 70K. We've come back down. We've hit the technical bottom, and then we started moving back up again, right? To me, that was the start of the bull run. So technically, we are in a bull run, right? This is actually a bull run. So of course, we have dumped. We've dropped 20%, whatever. We've dropped. Come from 31K, almost close to 32K. We've come back down to around 25, 26K right now, around 26K. And we're okay, right? We're okay. This is all part of the game. The only time it invalidates the bull run, right, is if we now go and do a lower figure below 15,000, for example, 15,400, whatever we're going to say, right? If we go below the recent low that we had, then we invalidate this bull run and we say, right, we're still in a bear market, we're going to go. So you see what I mean? So you can't, there is no such thing as a stamp of approval. That's it, right? There is no such thing. The only time we get that stamp of approval, if we go to a bottom and then recover to 50% of the market high, right? So all-time high. If we recover that, then we establish ourselves and say, right, we're now in the bull market. Let's push this forward and let's see how far we can go. That hasn't happened yet. This is one of the reasons why we were still at a risk of still testing lower levels. And I've mentioned this before as well. Someone said to me, like on previous videos, I mentioned like 13,800 is still on the playbooks. And they were like, you sure? I was like, yeah, it actually still is until we get above the 35K, or in our case for BTC it was 37K, but we had a nice little support. Sorry, like it was a resistance, it was a support which became a resistance, obviously. But if we can break that, that's positivity back in the market. Everyone's feeling good, and yeah, fantastic. We made a lot of money. So those are the levels that we need to look at, right? When we're looking at these things, this is the kind of levels we need to look at. Is yes, if we come back to 15K now, whatever, 15,400, then we could have a double bottom, which we already had technically, but we just say, okay, we invalidate, go below that, we invalidate the bull run, and now we confirm that we're still in a bear market, so it could take months and years. However, if we go the opposite way, and if we go back to the 35K, 37K, then we're confirming that we're still in a bull market, and we're just coming above the 50K, and that's when we have the stamp of approval to move forward. So there's this, it's like a gray area, like, you don't know how low you're going to go until you hit a bottom, and then you start recovering, and that's when the run starts. And of course on the top, we don't know how high we're going to go because we haven't tested those territories yet. We don't know how many trillions of dollars is ready to come in. Now I'm talking globally, right? We don't know, but what we do know is there are a lot of regulations and a lot of regulators around the globe preventing people in one form or another from entering, like, silly regulations, right? Where you have to do certain things, or your bank's not allowing you, or your government says straight out, oh, you can't buy crypto and this and that. That's happening, right? And it's all to prevent people from getting out of fiat into crypto. Because just like fiat, right? Let's put it this way, right? If you think about it this way, your government prints, 100 notes. Let's just say 100 notes. When you pass it on to a vendor, the vendor then deposits the 100 notes, and technically it's in a cycle, so that 100 note can be cycled. I'm not even talking about the fractional lending. I'm not even talking about any of this. I'm just saying simple terms. The government prints 100 notes. You go and spend that as a member of the country, and some vendors collected it. He then deposits it back to his bank, or he goes and gives it to somebody else. That cycle continues, and the money's still in circulation. Now, a problem happens is, for example, when that vendor decides to trade internationally. Now, internationally, obviously, the vendor's not going to be, or you, whoever, is not going to be sending actual physical notes to another country. So when you digitally send that money, that 100 note that exists, that's been printed, has to be destroyed. And this is where the problem occurs, right? Somebody somewhere keeps it, balances, gives you the balance abroad, but doesn't really destroy the notes. So now you have excess of 100 notes, right? Where the government's now printed more, but you have this excess. So that's kind of how inflation comes in. So governments don't want that, because they're like, hold on, that you're not helping me, right? Because it's not being burnt. Now, having digital currency, CBDC, technically does help that, right? But then that also causes more problem, because that means you have complete government surveillance now. So, there are problems, and there are perks, and there are pros and cons, right? Sadly. So that's what I'm seeing anyway. But those are what's stopping people from getting into the market. And of course, the other thing is a lot of people now. So in the beginning, right, when people started buying, selling Bitcoin and this and that, it was a system, it was a belief, it was a way, right, of moving yourself off the centralized system and creating something completely new. As I said, it was a belief, right, that we could do this. And it was done by coders and whatnot, and the valuation was created by the people. But currently you have too many people with a traditional mindset that have come into this, too many overeducated people. And they don't follow the how do you call this, like, you know, the bullish nature a lot of people have, like we buy, we hold, and then if the price goes up we sell, or if we need to purchase something we will sell. Instead, these guys have come in and they've created new instruments like futures, whatnot, and this and that, because that's how they make money, right? And of course the exchanges providing those services, that's how they make money as well. So it's become an economy of its own, right? Where, you know, we need traders, and give the traders the tools they want, and the services they want, so they can make money. But those traders that we have are too much traditional, so the TradFi, right? And that's what's preventing us from doing new all-time highs. That's what I'm going to say, right? Of course, on yesterday's video, I also mentioned one other thing as well, guys. I mentioned how, you know, if you can't afford BTC, buy Ethereum. And a lot of people know that I'm not a big fan of Ethereum, because it is highly centralized in some form or manner. But even then, the way I look at it is, Ethereum is one of those, it's just going to stick around, right? Forget the founders, forget everybody, it's still going to stick around. And I think that by sticking around, certain things are going to change. Obviously, they're already changing. Like, for example, the fee burn, that's a good thing. We've seen how they went from proof of stake to proof of work to proof of stake, and that's kind of stabilized, and that's working as well. And new protocols are also coming, like, you know, ZK Sync, this, that, whatever. A lot of them, right? Optimism, Arbitrum, they're all working side by side, helping with the Ethereum sharding mechanism to make transactions faster. Now, all I want to say is, whether you buy Ethereum, whether you buy Optimism, whether you buy Arbitrum, whether you buy, what's the other one? There's a few others, right, just not coming to me right now. Whichever one you buy, remember one thing. If they are working as Ethereum, as a replacement for Ethereum, or as a substitute for Ethereum, and they still require you to use Ethereum, you might as well stick to Ethereum. That's what I'm going to say. Of course, if you do a lot of transactions, you buy NFTs, you do whatever, you mint, you create programs, and you want something cheaper, then of course move to the other chains if you want it, right? Because you can always hop in and out. But just understand the consequences of hopping in and out. I personally, I would just stick to Ethereum, full stop. You know, yes, there are other coins that I would look at, and again, the ones that I've named, Arbitrum, Optimism, Base, when they release their coin, Matic or whatever, right? Again, as long as there's enough money invested into them, I trust them, right? So I'm not trusting the project, I'm not trusting the founders, I'm just trusting everybody else. You know, how many people have put their faith into this? If, you know, 1 billion people put their faith into this, or 1 million people put their faith into this, that's good enough for me. So that's how I'm moving with this. Again, relating back to, you know, the volatility and how I kind of pick my coins and stick to them, right? To me, it's always about the one with the highest volume. Yes, there are some of them which are actually to do with founders. Now, I'll give you a good example. Cardano. I didn't invest in Cardano because it has billions of dollars vested into it. No, right? I am not invested into that. I like Charles Hoskinson, the founder, and I think is a great mind, and I think they might be able to do something great. Maybe the way they went about it is not the right way, but I don't see a problem. I think that there's always a solution, as long as, you know, the founders have good intention, and I think the founder has a good intention. So for that reason, I think it can succeed. So yes, I am still very bullish on Cardano. In fact, I'm waiting for the dip where I might dip into it and get some more, right? So the current Bitcoin death cross, if it does happen, I am waiting for that. It should bring the price down a little bit more. And if it does, then I think, you know, just to buy a small portion is not bad. So that's Cardano. The other one I like, the founder, is Polkadot. I think he's, you know, obviously we know he's a genius. He built the Solidity, the language. He actually created that. And if he's using the same kind of a language, or, you know, something similar basically for Polkadot, and he's creating something completely new, that opens up a massive door, right? if Ethereum can power hundreds of thousands, if not millions of tokens on the Ethereum blockchain, I think Polkadot may have the capacity to do 10x that, all right? As long as he makes it easy. We know Charles Hoskinson, when they created Cardano, it wasn't that easy. But however, people are understanding and doing what needs to be done, and they are trying their best to make it as easy as possible. So I am looking forward to those projects because of the founders. There are other projects out there, complete hype. Yes, I will dabble into them, a little bit, but cautiously, only what I can afford to lose. So for example, the ones that I will only invest money that I can afford to lose would be like Polygon, Matic, Avalanche and XYZ. I understand what they are. I understand what they're trying to do. I even know the founders itself, right? We know what they're about. But we have seen certain things that don't look quite right. So for me, I want to stay cautious. So if I am going to invest money into Matic, then I am willing to lose that money, whatever I'm going to invest. If I'm investing money in Solana, I'm willing to lose that money, regardless what Solana's history is, right? Or regardless how great they are now compared to how great they were before. None of that matters. I will only invest with caution. And then you've got, for example, Avalanche, right? Again, we understand what they are. We understand what the founder's intention was. But only invest what I can afford to lose. But when it comes to projects like Cardano, Ethereum, and Polkadot, right? I'm putting my faith into the founders. So yes, I will also invest money that I can afford to lose, but it's not based on the project. It's more towards the founder. So that's how I'm putting it. When it comes to Bitcoin, theoretically, it's the coin itself. It's the money. So there's more to it, right? So it's about how much money that's locked inside. It's about the founder as well. We don't know who the founder is, and that gives me more. It's not credible, but at the same time, I'm okay with it. I'd rather not know who the founder is, right? And then it's decentralized. So those are the kinds of things I'm looking at. And just hope things go well. But other than that, guys, I'm not going to make this video any longer. It's already like 22 minutes. But yeah, I'm looking at the chart. And from what I see on the chart, we are currently struggling with a mini resistance level, right? A mini resistance level that we've kind of made recently. So we are kind of struggling with that. And that's what's giving me the indication that we might just have a nice little pump. But it's going to be a very minuscule pump. It's not going to be anything above 27k. If we did see a pump, then immediately after the pump, I would expect a dump, if not the dump already, right? So I'm expecting the dump more than anything else. Pump, I'm not too concerned about. If we do get a pump, if we don't get a pump, not bothered about that. But I am going to see a dump. Cardano, I did want to talk about Cardano a little bit, but I actually don't have the chart on me because I only have a BTC chart at the moment. I haven't looked at Cardano for maybe a year now because I bought my stacks, right? So this is the thing. A lot of people that have followed this channel for a long time probably already know that Cardano was something that I invested back in 2018. So for me, during the previous bull run, whatever profits I made from any top-ups that I made, I've already taken the profits. I've already taken my initial investment out. And then I left my excess Cardano in there. And I have topped up twice after that, but the last time I topped up was about a year ago. So I haven't looked at it since, and I know I'm severely down. But again, I'm not too fast. I'm not too bothered. I would love to top up a little bit more, and that's why I'm going to be topping up. Because as I said, it's the founder that I'm looking at. It's what the project is doing. And more importantly, actually, this is another fun fact, right? So this one doesn't really apply to Bitcoin, funnily. This applies to companies like Solana, Ethereum, Polygon, and all sorts, right? Is how many people are actually using the protocol. And this is why I said it doesn't apply to Bitcoin. Not many people use Bitcoin, and not many developers are working on Bitcoin. We do get, every now and then, we get some sort of an upgrade. And they are far-fetched, right? So we get some sort of an upgrade. Once we get our upgrade, it's all happy days for us, and then yeah, we just move on. you know, people are not using Bitcoin to buy, sell, build, whatever, right? Recently we had the, what's it called, the ordinals, which is like the Bitcoin version of NFTs. That created a massive hype. That's about it, and then it died off, it fizzled off, right? Because the pricing was just ridiculous. I mean, what they were doing is just ridiculous. So that happened, you know. But when you look at the other projects, especially the smart contract projects, right? When you start looking at them, because pretty much every other blockchain is a smart contract project, other than coins like Monero, Litecoin, and stuff like this, right? Zcash and whatnot. They're all smart contracts. Now, on the smart contract projects, like, you know, Bitcoin, not Bitcoin, sorry, Ethereum, Solana, whatever, you've got to look at how much development is going on, or how much activity is going on, right? And there is a lot. I mean, that's another way of measuring good projects, like how much activity, first of all, from the founders, right? Because the founders are actively doing modifications, upgrade, whatnot. And that's part of the roadmap, obviously, because I mean, there are some projects where they've had roadmaps and they finalized those roadmaps, right? After a certain upgrade, they said, right, that's it. And then they just do maintenance upgrades. Let's just call it maintenance upgrades. And that's it, project's done and over. And then it's up to the community to continue building on it. And then you got projects like, you know, for example, Solana. You've got a massive development community on it. Also, you have a lot of users on it. Now, we do know where most of the users are coming, right? The first most users are coming actually from NFTs. A lot of these blockchains, a lot of users are coming from NFTs, right? Even free NFTs, right? I've seen people giving away free NFTs, and that's where they're coming from, which is okay. So you get user numbers. And then you get some from the DeFi. So yeah, you know, not much from the DeFi in my opinion. But you do get quite a significant amount from DeFi. So yeah, that's where the users are coming from. Of course, DeFi in the US, something to do with some rules and regulations. DeFi might start becoming a bit difficult. But again, I mean, what we have to understand, and a lot of people have to understand, is, look, in crypto, there is no barriers. There is no borders. Crypto without borders, right? There is absolutely no borders. So if countries like USA have the power to brainwash people and stopping people from interacting with some crazy rules and regulations, then let it be. Let it be. The world is not USA. The world is the world, right? There are plenty of countries out there. So you got to understand this, right? Everything doesn't revolve around USA. Please understand this, right? And I think they also know this as well. The more restrictive they become, the more projects and money is going to move away. And when money moves away, it's going to cause a lot of problems, especially for USA. When I'm talking about problems, I'm talking if money starts moving away, what are you going to do with all the excess fund money that you've printed? No one wants it. So then you go into an inflationary situation where you're trying to prop up the prices in order to burn up the money, because it's all about how much surplus money you have. Ideally, for good money to work, there shouldn't be any money sitting in reserve. Good money should be in the hands of the people and hands of the merchants, right? Constantly moving around, buying and selling, good circulation, you know, when you cycle through the funds. That's good money. Bad money is money that's sitting in a bank account or numbers sitting in somewhere. That's bad money. Stagnant, that's stale money. You don't want that money. So yeah, other than that, I've got a long journey. I'm just past the roadworks. I'm about to speed up. So there's going to be a lot of sound issues on the motorway. I hope the video was informative. I know it's probably not what you wanted. You probably wanted to hear about something else. But you know what? Sometimes we don't want to talk about, oh, the chart's going to do this, or this is going to happen, or that's going to happen. We just want to talk. That's what it is. So I hope the video was informative. And if you do want to talk about something else, I am going to talk about other coins as well in more details at a later stage. Now's not the time. Now we just want to sit back, relax, observe the market, let the market come to where we want it to come, and then just pick up. Because the next bull run, I mean, we're already in the bull run, technical bull run, right? As I said, we're not confirmed, but we are in a bull run, right? Anything from low upwards is a bull run. So we are moving upwards. The trajectory is clear. Question is when does the parabola start? Because the parabola is what's going to create the biggest high. The parabola is going to give us the biggest amount of profits and the new all-time highs. So question is, when is that going to happen? That's what we need to wait for. And it's not long. I don't think it's going to be long. I think it's going to happen very soon. If not 2024, not 2023 definitely, but if not 2024, possibly 2025. So, but the closer we are, we will know. We don't know for sure right now. So just hold tight, right? Let's not get too hopeful. Relax and just be cautious when you're investing money. You know, and always remember, guys, do not invest more than you can afford to lose, please. It doesn't matter if you have $100 worth of BTC. If $100 is what you can afford to lose, that's all you need, right? If you're buying it for the future, that's all you need, right? You know, same applies to any coin. Don't buy anything that you can't afford to lose, full stop. Other than that, guys, I'll catch you on another one very soon. As I said, I'm jumping on the motorway now, so adios, amigos.